Hello and welcome to the Libinance podcast, where history, current trends, and smart investments collide for an exhilarating ride. We'd love to hear from you on what you think, and do follow us on all our social media accounts and leave your feedback as always. I'm Lois Boy, you can call me Libby, and I will be your host for the podcast. For each episode, we embark on a journey through time, explore deep hidden financial histories. From there, we dissect the pulse of today's financial world, breaking down complex trends. But that's not all. We talk about practical investment strategies to empower you on your financial journey. What's poppin'? Hey guys, you are welcome back to the Libinance podcast, where we believe the world of finance is for everyone to know. I trust you're all doing well, and of course, we're all looking forward to the weekend. Omo, I've said it again, and I will say it again. And if you're waiting for me to say it, then here it goes. Thursday is the best day of the work week. Because think about it, if Thursday doesn't come, there's no hope that Friday will come. And if Friday comes, whoosh, the icing on the cake. So there's no argument there. Thursday is the best day of the week. Now, before I forget, this Sunday, which is the 16th of June, is Father's Day. Oh yes, Father's Day. Now, I told you that the Libinance podcast never forgets. So we want to be the first to wish dads out there before the day even comes. You dads out there, you are amazing, and God bless you for us. We love you very much. So for today's episode, we are exploring the ARB Apex Bank, a very crucial player in the Ghanaian financial system, especially in the rural and community banking sector. But first, let's take a step back and look at one major history in Ghana. This history is related to the banking crisis that happened in 2017-2019. So sit back, relax, and let's talk history. In August 2017, the Bank of Ghana revoked the license of two domestic universal banks, UT Bank and Capital Bank. The reason was that the banks were insolvent. Insolvency occurs when a bank's assets are not sufficient to cover its liabilities. To simply put, what they have, their asset, is not enough to pay what they owe, their liabilities, or simply when its capital falls to zero or even negative. Now, the reason why capital is a big deal in banks is that it acts as a cushion for shocks like high loan defaults, market risk, or even liquidity risks. So like when people are not paying off their loans, the loss is absorbed by the capital. Don't worry, we will talk about liquidity risks some other time. But when a bank goes insolvent, it almost never ends well for the bank and its customers. So, the banking system that comprised of 36 banks, 19 domestic and 17 foreign, was now reduced to 34 banks. To protect customers, the Central Bank, Bank of Ghana, allowed one of Ghana's oldest bank, GCB, to undertake a purchase and assumption agreement with these two banks. A P&A agreement is a transaction where a healthy bank, in this case GCB, acquires the assets and assumes the liabilities of the failing bank. To simply put it, the good bank buys the good assets and also takes on the debts and liabilities of the struggling bank. When you want to start a bank, the Bank of Ghana sets a minimum capital requirement, meaning the capital that you are supposed to use to start the bank. Now, in that period, the minimum capital requirement was 120 million. After the two banks went insolvent, the Bank of Ghana increased the minimum capital requirement from 120 million to 400 million. Increasing the minimum capital requirement isn't an unusual thing by central banks. In fact, it's something they can do quite often. But an increase, a huge increase from 120 to 400 million, should have given us a signal that something was wrong in the banking sector. Then, in January 2018, the December 2017 banking report was released, and in the executive summary, there was a warning in hindsight that read, and I quote, "The banking sector is expected to undergo significant reforms, including compliance with a new minimum paid-up capital by December to strengthen the industry's capital base, Banks would also embark on establishing stringent risk management frameworks for effectiveness to protect deposits of funds. To simply put, the Bank of Ghana was saying that the banking system from hence on was going to undertake strict rules and they were going to make sure that depositors' funds were protected. Honestly, it's hard to imagine a more explicit warning than this. It was a crystal clear signal of what was to come. Then, 7 months later, August 2018, there was a press release from the Bank of Ghana revealing that it had revoked the license of 5 banks and had established an indigenous bank called CBG. But 5 years prior to that, in 2015, the central bank had performed an asset quality review, AQR, on the banks and had made an update in 2016. An AQR is simply a thorough check on the bank's financial health to see if they are in good shape. And results from the AQR report revealed some disturbing news. Some banks were found to be undercapitalized. That means that they had little to no capital. Other banks were also found to have had more than 50% of their loans going bad, meaning that more than 50% of the loans they had given was not going to come back to them. In Tree, we call it Sikano Ashigidigidi. And some banks were operating, but the license they were having was false. So the Bank of Ghana revoked their license in an effort to reduce panic, because something of that nature would and could cause panic in the financial system. Customers would be agitated as to whether their funds were safe or not. So, in an effort to reduce such panic, the central bank established the CBG and allowed CBG to also undertake the P&A agreement with the 5 banks. But they had more liabilities than assets, so the central bank had to help out. And in helping out, they issued a bond of up to 5.76 billion to support it. In the course of 2018-2019, other banks got merged and some also exited the sector, meaning they left the Ghanaian banking system. And that brings us to the sector today, where the central bank has never been more vigilant and strict in its oversight. And you can understand why, because look, in the financial system, there's something called a contagion. A contagion is simply when a problem in one bank quickly spreads to other banks, causing widespread instability and potential collapse. And the potential risk that could be caused by a contagion is unimaginable. Like, in simple words, you see how the coronavirus quickly spread throughout the world? That is exactly how a contagion in the financial system is. It's very serious. And that is why you find the central bank very strict on the banks. Because, the banking system is a very important component of our economy. And that's because it forms a major part of our monetary system. And so allowing troubled banks to fail is one of the hardest decisions ever. But also allowing them to stay in business whilst in bad shape can cause a contagion. And we don't want that. These are some of the toughest challenges any central bank faces. But in the end, it's their job anyway. It is what it is. Back to today's topic, the ARB Apex Bank. Remember how we talked about universal banks in one of our previous episodes? Well, aside from universal banks, we have other financial institutions in Ghana called Specialized Deposit Taking Institutions, SDIs. And you know what? These SDIs are categorized into 3 types: savings and loans, rural and community banks known as RCBs, and finance houses. In Ghana, we have 26 savings and loans companies, and we have 147 RCBs, rural and community banks. That's a lot, right? I know. And you know what? The Bank of Ghana oversees all these banks. But just like how our brains don't have time to tell our heart to pump blood every second, because to be honest, the brain has a lot of things to do. It delegates that task to the pacemaker. So I guess you can say the pacemaker is the heart's own brain. In the same way, 147 rural and community banks, or more, that's a lot for the central bank to handle alone. So it delegated that task to the ARB Apex Bank. So the ARB Apex Bank is a mini central bank, like the small brother of Bank of Ghana. that provides liquidity support and oversees the rural and community banks, and also provides other kinds of support specifically to RCBs. Now, the ARB Apex Bank is very important, as I've said, almost if not for anything at all. They are overseeing 147 banks. I mean, Charlie, it's not easy. They help in promoting financial inclusion, especially in rural areas where access to banking services is limited. They also work closely with the Bank of Ghana to make sure that these RCBs are complying with regulations. But there was one thing I found very interesting, and that was the model structure of the ARB Apex Bank. It has a cooperative ownership model structure. So what I mean by that is the 147 rural banks are shareholders of the ARB Apex Bank, which to me is quite interesting. And I see the idea of the structure, which is to have the RCBs have a sense of ownership and participation in the governance of the ARB Apex Bank. But still, to be honest, I'm still trying to wrap my head around it. Because how can the governed also be the ones governing? It seems like a potential conflict of interest to me. Because I'm thinking to myself, shouldn't a mini central bank like the ARB Apex Bank be answerable to only one body, the main central bank, to maintain its independence? Don't get me wrong, I see the benefits of this model structure. But really, let's be honest, isn't there a risk of blurring the lines of oversight and regulation? I don't know, guys. What do you think? Let's hear from you. You can visit our LinkedIn page and put your comments under the episode post, or you can email us with your input or your opinion at libinanspodcast@gmail.com. It's right in the description box. We want to hear from you as well. That's a wrap for today, guys. I hope you enjoyed it and I hope you found this insightful. Don't forget to follow us on our social media pages at Libinance Podcast, and also don't forget to give a feedback on our episodes. Guys, enjoy the rest of your evening, the day, enjoy the rest of the work week. So see you next week, same time, same channel, and remember, the world of finance is for everyone to know. Adios. Bye-bye. Thank you for listening to the Libinance Podcast. We'd love to hear from you on what you think, and do follow us on all our social media accounts and leave your feedback as always.